Well, the question on everyone's lips right now is what is going to happen to the market as a result of all the uncertainty that is happening at the moment, thanks to the current pandemic that the world is dealing with. I'm Jackie Tomes. I run Tomes Homes. I'm the founder and CEO of that, and I also lead Property Strategy 2, which helps other property investors to strategize and scale up their investing. And whilst I'm not an economist, I've got a very keen interest in this subject area, and I've geeked out a lot about what different factors are actually affecting our economy at the moment and what's this going to mean for the property prices and how the market evolves over the next 12 to 18 months. So for us, we've looked at some of the key factors that are influencing all of this, and so I just wanted to summarise some of them to give you some context, because I think that's the important thing. Is you may feel that all the certainty that you had before about what was going to happen in 2020, you probably felt like the rug's been pulled out from under you. So how do you adjust to this different world that we're in, and how should you be adjusting your decisions accordingly? So I guess the first thing to say is you may hear a lot of hope about the fact that this is going to be a 3-month thing. I must say that myself at one point I thought this would be a short, sharp shock to the economy that we'd probably quickly bounce back on. But when you start to look at some of the real impact that it's having on businesses, yes, there's the great furlough scheme that the government have come up with, but if people weren't being furloughed, those would be redundancies. So what we're going to be looking at is a lot of, well, much increased unemployment over the months to come. Businesses, not just in property but more widely, have seen a huge drop in their revenues. It's been a very quick decline, and whilst I was thinking at one point that the first quarter of recession would be Q2 in 2020, I actually think it's been so dramatic at the end, the last half of March, that actually Q1 and Q2 will see us going into recession, which is going to obviously affect then the psychology of everyone in Q3, because then we'll be officially in a recession, which is then everyone else panics because the newspapers have got officially that title to slap upon it, which then means that even though we might be coming out of the lockdown, say it is in 3 months that some of the restrictions start to be released, what's going to happen as maybe things might start to be coming back to some kind of normality, though I do question that then the word recession is thrown around and it influences market confidence, which doesn't do good things for property transaction values. So that's going to influence Q3. And whilst we're also going to see other businesses start to come back to life in some way, it's like a moving wheel. If you just stop that wheel, it takes some time to get that momentum back and going again. So it's not going to be an instant switch to come back to the economy just moving again. It's going to take some time for that to start moving again. And hey, then we're going to start to head into Q4. And what is Q4 taking us towards? Well, the Brexit, end of the transition period. And so even if there is some confidence starting to come back at that point, it's going to be squashed by that looming transition date coming to an end. And because the government hasn't had enough time to put its attention on it, there's going to be a lot of nervousness around that. So from our perspective, 2020 is not looking like a great year to be particularly refinancing property. You may have seen many banks recently, they're changing their loan to values, they're changing whether they'll even take on new applications at this point. And hey, right now you can't even get surveyors to go out and value property. So there is going to be an impact on the market. We've been reading various reports about it. Some are saying as little as 5% drop in housing pricing, but I don't see how it can be that small with such big shifts in the market at this point. From our personal research that we've done, we're anticipating there's going to be much nearer to a 10 to 20% drop in transaction in property prices. Obviously transaction levels have fallen off a cliff, and any transactions that are going through at this point are going to be the ones that are the people who are in distress, who have to sell quickly, who are going to be motivated to take lower prices. So I actually think it's going to look, the data in a few months' time for how much property prices have been affected is going to be quite a shock, which then once we start to hear about that data, and there's always going to be a lag to that coming through, that's going to spook the markets as well. So what we're looking at is that really 2020 is going to be a year of uncertainty, and definitely into 2021 as well, and particularly because freedom of movement and lack of isolation can't really come about until there's either this herd immunity that's being talked about or there's a vaccine, and we know that a vaccine is probably 18 months away. So we are very much planning for a different world over the next 12 to 18 months. the projects that we had in the pipeline, we buy blocks of flats, and normally we look to refinance those blocks after 6 months. That's not going to be it's not going to be the time to do that in the autumn of this year. So we're adjusting our plans, looking at timeframes, because I think ultimately, if you are thinking with a longer term view and you're not on high interest finance, trying to get in and out within 6 months, there probably is still a pivot that you can implement in your property business to be able to still be moving and growing during this time, but it needs to change. And if we just think that everything's going to bounce back in 3 months, that is, you're placing a lot of hope on that happening. So I highly recommend readjusting that, thinking that this is going to be a longer term shift and change, and adapting your investing accordingly. We'll be back with more thoughts and ideas, analysis. We're very much known for our analysis and our detail. We're geeking out on this every day, working the hardest that we've worked for a very long time to make sure we've got really good pieces of insight and thought processes to be able to make decisions and ultimately to support you in our community as well. So hope that's helped. Make decisions, don't procrastinate on them, because the sooner you can act, the easier it's going to be to navigate through your way through 2020 in the new world.